Hey, it's Ryan from the Dividend Investors Club, and this is the market trend tracker for the week of February 20th, 2018. So we had a huge bounce back in stocks last week. I think it made everyone feel a little bit more comfortable that we're not going to have this huge crash that's going to continue to wipe out our portfolios. So it was a great week for that from that perspective. But the big question is it all systems go again, or is there reason for continued caution? And that's where we follow the trends. I'm going to point out a few things just to continue to watch, because I think we do need to continue to be a little bit cautious, because I don't think we're going to make new highs just yet. But I think last week was a very positive week for the markets. So let's take a look at the trends. So you can kind of see, obviously, the big chart we follow in the top left-hand corner of the S&P 500. You can see this huge kind of V bounce that we had right here, off of the lows. Again, the intraday low was down about 10% from the high, and so we did get that full kind of correction there, but we bounced back very quickly. And so, the big question really is this sustainable? Is it a good thing that it bounced back so quickly? And I think people are kind of skeptical about that in general. But I think what I said last week, it still holds, and I do believe this. I don't think we're going to break down below this level, but I do think it's possible to retest it. And so what I said last week is that the range has been set. And so if you kind of think about this as the range, it can kind of help you figure out, what do you want to do going forward? When do you want to allocate funds to new stocks? And I think what you do is you take a look at this range, because I think we really are going to bounce up and down between this range. And we may get close, to making a new high. I don't think we will. But don't be surprised if we come back down and test that low. That said, if we test that low again, I think that opens the door to potentially make new highs, going forward from there. So volatility is going to remain high. Just don't get overly confident just yet that all systems are go and that we're just going to go make new highs, because I don't think that's going to be the case here. But it was a very positive bounce. I think it showed that a lot of that pullback was very technical. Not that it didn't need to happen. I think we did get ahead of ourselves, and the market was very overbought. And so it's nice to see that quick bounce back. But just be a little bit cautious that maybe we might just test these lows again. And the nice thing about that, and as I'm looking at specific stocks, and you can do this as well, go back and look. Last I forget, is it last Friday maybe? Not this last Friday, but 2 weeks ago Friday, when we made this low. Go back and look and see those stocks on your watch list. What was the low that those stocks hit on that day? And that's kind of the level that you can see, like that's your downside, right? That they could very well hit that level again, but very, very rarely do we get that kind of extra insight on how low could some of these stocks go. And I think that's a very good kind of level to keep your mind on. So as you're nibbling on stocks, right now, and as you see stocks pull back, just keep your eye on that number. And if we're close to that number, that gives you a little bit, better confidence that you can, take advantage of the pullback in certain stocks, and kind of how much you want to allocate to those stocks. So that's certainly one thing to keep your eye on. Other thing, volatility. Again, this thing spiked. Volatility spiked. The VIX spiked up to like 50 intraday. It closed that day up in the high 30s, but it spiked to 50 intraday. But now we're, as of the close last week, we're down, below 20 again, which is good. But again, watch this. If this starts spiking up again, and we're above 20, that's more caution that hey, that pullback to test the lows could be coming. It may happen very fast like it did before. It may take a few weeks to kind of get down there. We'll see. But again, just keep your eye on that. Keep your eye on what the market's showing you, and that kind of gives you insight on what to do. The third big trend, obviously, we need to follow is the interest rate picture, and kind of how that relates to dividend stocks and the spread here that we always talk about. I mean, look, that spread is pretty wide. It's 100 basis points. And so, as we continue to see the 10-year Treasury, kind of creep up towards 3%. What that's factoring in is 3 or 4 rate hikes this year. And so as we get new economic information in, and those probabilities change for those rate hikes, I think you'll see the 10-year kind of react. I do think that most of those hikes this year are in. So the question is, how much further do they go beyond that, and how high does this go? And people I think that 3% is a foregone conclusion. I think that's probably correct. But does it go to 3.5, or does it get close to 4? And that's when you obviously start to worry a little bit more about just that spread in bonds versus stocks. But I expect this to kind of continue to be a little bit flatter, but until we get the next rate hike, and until those probabilities continue to go up on those rate hikes, towards the end of the year. But these are definitely signs to watch certain sectors, and I'll talk about that in a minute. But definitely keep your eye on that. That's one big catalyst that people felt like caused the big sell-off to begin with. So definitely don't lose sight of rates and where they are. So let's just take a look at what kind of led us back, and I think that gives you insight also to hey, if we get another pullback, down in this range towards the bottom of the range, which sectors are probably going to lead the way down, but also which sectors will probably lead the way back up. And what we've seen is it's cyclicals, right? So you just saw this. So this line right here gives you a good insight of what led the market back last week, and it's cyclicals, right? It's technology, financials, consumer discretionary. You can see those types of stocks are the ones. Industrials, right? Those type of cyclical stocks is what led us back last week, and I think that will be the case again. We are in a strong economy right now. Earnings growth is good, so that's what you kind of expect. You expect those cyclicals to lead us on the way down and on the way up, and I think that'll continue to be the case. And so just keep that in mind as the market kind of gyrates, and you get some buying opportunities in these certain sectors. These are the ones that are probably going to be coming back, and those are the ones you should probably focus on. On the same light, you can see that growth, which tends to be more cyclical stocks in general, right here. If you kind of look at asset classes, we have value versus growth right here. So you can see that growth certainly led us back last week. Value lagged a little bit, and you can kind of see the NASDAQ again, right? NASDAQ was up. Technology stocks led us back. And then, emerging markets, again, one of those kind of higher beta, type asset classes, led us back as well. So that was the best performer last week, on the way back. And so, keep your eye on growth and keep your eye on cyclicals, because I think that's where you're getting the leadership right now, and that's where you want to see, and look for opportunities, as the market gyrates. Two just specific sectors to obviously keep your eye on as relation to rates, and we've talked about this in the past. Utilities and real estate, they're in a downtrend. These are two sectors here that I think have a lot of value in them, but they've been completely affected by this picture right here. And so as this one starts to stabilize, I think that's when you start dipping your toe in the water more on the real estate and utility side, because these are all the high yield sectors, right? These are the sectors that are going to give you that nice high, 3 to 5, 6% dividend yield on some of these stocks. And those, we can't ignore them. Obviously, they're in a downtrend. You don't want to catch a falling knife because we don't know how high rates are going to go. But at some point, that's going to be reflected in those stocks, and those are going to be great buying opportunities because there's going to be a lot of upside, and you're going to get that nice big, juicy yield that you expect. So keep your eye on rates as it relates to those two sectors. And then also, one other sector just to watch in regard to another asset class is obviously the price of crude oil. As that changes, you're going to see the energy and MLP picture change a little bit as well. And you can kind of see that they've been underperforming. They were underperforming last week. And you get a little bit of that lag in there from when crude oil, declines to when the stocks start to decline. And so just keep your eye on that crude oil picture. As crude oil comes up, I think those energy and MLP names, again, a lot of those are higher yielding securities. Keep your eye on those, because those are ones that potentially could offer some value again down the road. So on that light, let's finish this video with taking a look at the picture of the various charts for these sectors, and you can kind of see again these are all color coded. Green means that they're an uptrend. Yellow means they're kind of flat or just kind of in a medium trend, and then the red is clearly in a downtrend. And so These again are the sectors I was talking about that are going to lead. These are the sectors that you want to keep your eye on. Some of these ones, consumer discretionary up here at top kind of stayed in an uptrend the whole way. But a lot of these other ones, you can see, let's just look at financials. You can see kind of dip down below, right? Dip down below the 50-day. Now we're back above it. You see healthcare dipped all the way down to the 200-day and it's bounced back. Industrial, same thing, almost down to the 200-day bounce back. Technology, same thing. So you're getting that similar kind of V bottom on a lot of these sectors that, again, you're going to want to follow going forward. And so keep your eye on these charts because they give you a sense for, how low can some of these sectors go, based on what the last pullback was. And, as we get below the 50-day on some of these sectors, keep your eye on those stocks in those sectors because those are the ones, again, are going to lead us, back going forward. And so other ones, again, deep value to kind of stretch more caution on. Again, maybe take smaller position sizes, stick to the leaders. That's what we've been talking about in real estate. Stick to the leaders in that space. You're going to want to be in real estate, a year from now. So start nibbling on some of those leaders because you can just see how depressed these prices are in that sector. Same with utilities. So stick to those leaders in those sectors. Don't be afraid to nibble. Maybe take 25% of a position, on these stocks as they trade down, because you're not going to regret it, because there's going to be some significant upside as soon as these stocks get back into favor, and they always do. It's just part of a cycle, and you're going to get those great yields that you expect out of those sectors. And so keep your eye on those, but be a little bit more cautious, again on those, and just focus again on the leaders. And again, this is kind of what we look at. This is what allows us to feel comfortable continuing to operate our plan kind of in any market environment. You take a look at the general market, you kind of see where that's at. You kind of see where the trends are, what the trends are telling us. So just focus on that range that I talked about in the S&P. Focus on, where the 10-year treasury is. Keep your eye on volatility. And again, keep your eye on these cyclical sectors and stocks within those sectors that you want to focus on. So that's all I have for this week. Have a great week, everyone. Take care.
I think we all know that the stock market can be a scary place, especially if you're trying to go at it alone, but you don't have to do it. You don't have to be there alone. At the Dividend Investors Club, it's a community of investors. We're working together to grow and preserve our wealth. So if you like this video, please check us out at dividendinvestorsclub.com. Consider joining the club and joining us, and definitely subscribe to our YouTube channel by clicking the subscribe button below this video. Take care.